Hi, everyone. Thanks for joining us. We are just going to wait a minute or two to let other people filter in since it is 3 p.m. So just sit tight for a little bit and then we'll kick it off. All right. Welcome, everyone, and thank you for joining us for this year's EnergySage Solar Tax Incentives webinar. We know there's going to be a lot of questions this year, and we'll leave plenty of time for that at the end. But to kick us off, I will introduce our speakers for today, give a little explanation of what we're going to talk through, and we'll be good to go. So we are lucky to have with us today Jordan Naffa. He is the Director of Financial Planning at Arista Wealth Management based out of Las Vegas. Welcome, Jordan. And my name is Alix. I'm one of our senior researchers here at EnergySage that focuses on financing. And we also have Sam Kooharian, who has been with us for a few years and is an energy advisor. So he is used to answering all of your questions every day. And we know that, of course, the big question on everyone's mind this year is what is going to happen with the federal solar tax credit because of the new administration. So we're going to leave plenty of questions at the end to get all of your questions about what will happen with the Trump executive orders, what we think we can plan for in the future. And we'll kind of break down the different orders and what they've said. But before we get to that, we are going to walk through all of the basics to make sure we're all on the same page and that everybody understands exactly how the credit works. And if you think of questions throughout, you can drop them into the chat. We will be monitoring them so we can answer them later on, but feel free to include them as we go. And I'm going to kick it off to Sam, and he's going to explain what exactly the solar tax credit is.
Awesome. Thanks, Alex. And yeah, thanks everyone for joining. Really excited to talk with you guys about the tax credits today. I speak with customers every day about all these kind of questions and the stuff that's going on currently with the incentives. So yeah, just on a high level, right? What is the federal solar tax investment credit? It's an investment tax credit that allows you to get 30% of the cost of your solar energy system as a credit off your federal tax bill. Originally, it was going to expire in 2022, but it was extended till 2034 as part of the Inflation Reduction Act. So it's set to step down in value over time, but currently it's in place to be at 30% until 2032. So when you install your system would dictate how much tax credit you'll be able to receive. So yeah, how does a tax credit work, right? A tax credit it's not a rebate or a tax deduction. What it does is it's a dollar for dollar reduction of your federal tax bill. So whatever you owe, you can use this tax credit directly against that to cover the cost. So the stipulation there is you must owe taxes, right, in order to receive and use that credit. If your tax liability, though, isn't large enough in 1 year to use the entire credit amount, you can roll that remainder over to the next year and keep doing that until you've used the entire tax credit amount. The great thing about the solar tax credit as well too is that there's no income limit. There's no cap on the amount of the tax credit as well. Some of the stipulations, right? So it can only be claimed if you purchase the system. So you get cash payment or like financing through a loan. So other solar options like leases or PPAs, power purchase agreements, would mean you don't qualify to receive the tax credit. So who's eligible for the tax credit? If you installed your PV solar system between January 1st, 2017 and December 31st, 2034, you're eligible for the tax credit, right? Couple stipulations on that. So the solar panel system has to be located as a residence of yours. It could be a secondary home, but it has to be somewhere you live. You have to own that solar PV system, right? So like we said, no third-party ownership options, no leases, PPAs. And the equipment that you're purchasing, the system has to be new equipment. It has to be being installed for the first time. So you can't buy like pre-used or recycled equipment. And then what's covered under the tax credit here? So a lot of the things you would expect, right? So the cost of the solar panels, but also includes labor costs for installation, permitting fees, inspection costs, developer costs, all of those kind of costs that are rolled together to get your final bill from the installer. It would also include any additional, necessary equipment. So the inverters, the wiring, the mounting hardware, all the nuts and bolts that go on to attaching those panels to your roof. The solar tax credit also includes storage, so battery storage, right? Energy storage. As long as you're 3 kWh or above, you are also eligible for a 30% tax credit on that system. And sales tax as well too is covered by the tax credit. So some of the things that are not covered by the tax credit, you get these questions a lot. So traditional roofing materials and structural components generally do not qualify, right? So if you're looking at upgrading your roof for going solar, it's pretty common that the cost of doing that specifically would not be covered by the solar tax credit. Maintenance costs, right, such as cleaning or repairs, not something you would typically need to do, but that's not covered by the tax credit. And then other miscellaneous expenses. So, in financing, like interest owed, for example, wouldn't be covered by the solar tax credit. And then, yeah, so storage incentives. Again, like I mentioned, that's available for the 30% tax credit as well, too. Storage or batteries are the same thing. Under the Inflation Reduction Act, the update was as well as increasing the 30% federal tax credit allows you to claim it for a battery-only install as well too. So you don't have to get it at the same time as solar in order to get the federal tax credit. But yeah, same idea, covers 30% of the cost, available through 2032. So usually that's like a $3,000 to $5,000, reduction in cost there and savings. There's also the commercial storage incentive. So that starts in 2025 this year. It offers 50% credit for battery storage with a base 6% credit that increases. The project has to meet criteria for U.S. materials being, made of a certain amount of U.S. Produced materials, or being like in an energy community. And then on top of that, so, of course, these are federal incentives, the tax credits, but they're also usually state level incentives as well too, especially for storage systems and batteries. An upfront rebate is what you would think of as like, the state basically cutting you a check upfront for taking off a portion of the cost of investing in the equipment. And then there's performance-based incentives. So these are ways that you would get paid over time. Typically, you would be allowing like the utility to have access to your battery to offset during like peak load hours, and they would usually pay you per kilowatt hour for that. So yeah, there are some utilities that are offering incentives as well to business owners who install storage. So there's a lot of stuff that's coming out and emerging for battery storage that's becoming more popular across the country.
Hey,
Awesome.
thank
And
you, Sam.
over to Jordan.
Hey, thank you so much, Sam. Well, let's dive into some just general examples of how the ITC can be super beneficial to individuals. So let's say someone installs a solar energy system and they qualify for a $6,000 tax credit. If their federal income tax presumably is $15,000, this means they pay $6,000 less in tax, meaning that it's going to reduce their tax liability just to $9,000. So super powerful. It's not a deduction against income. It directly lowers the amount of taxable income that you pay. So the ITC tax credit is just super powerful. Now, in this next example, we're going to talk through a bit more of a complex case where in this scenario, someone qualifies for a $6,000 tax credit, but they only owe $5,000 in taxes. Well, what happens? Instead of a refund, the remaining $1,000 rolls over into the following tax year. So this ensures that you could still benefit from the tax credit, but if your tax liability is lower than the credit amount, it's going to roll over into future years. And also another key takeaway is taking a look at the residential clean energy credit. And in that particular scenario, some of these credits are non-refundable, meaning that it cannot reduce your tax liability below $0 in a particular year. So if someone doesn't owe enough in taxes, they should speak with their tax professional, because you want to make sure we're all on the same page and ensuring that these credits roll over into future years. So that's also very important. On the next slide here is where tax rates presumably would be headed. So this is under the current Tax Cuts and Jobs Act in 2024. The rates start at 10% and increase all the way up to 37%. This is married filing joint. Presumably, the Tax Cuts and Jobs Act is likely going to be extended. So instead of the sunset and tax rates going up, so instead of starting at 10% and ending at 40%, tax rates will likely remain still relatively low. Now, what's interesting about this is married filing joint. If you make over 731 grand, you're paying 37% just in federal tax. Once the Tax Cuts and Jobs Act is scheduled to sunset or expire, it nearly cuts it in half to 480 grand, and you're paying over 40%. And so these solar tax credits, the dollar for dollar tax deduction, are just super powerful. Alex, it looks like you're muted still.
Thank you. Yeah. All right. We will get to the potential policy changes now that we have gone over the basics. So obviously this is top of mind for everyone, which is this credit still going to exist and what's going to happen? So what we know, obviously, as of right now, is that the Trump administration issued this announcement that they want to freeze all of the funding. But right now, basically, when it comes to things like this has all already been approved by Congress. And a lot of these funds have actually, in many cases, been dispersed already. So while we think it is unlikely that they will be successful in rolling back all of these funds, we don't 100% know. But right now, our position is that it is highly likely, and the most likely scenario, that you will still be safe to claim the credit for the year 2025 if you install solar panels this year. So you're 100% safe if you installed solar panels last year. That's 2024. You can still qualify. If you didn't have enough tax liability, you should still be able to roll that over this year. And the same goes for this year. We think that it is a safe bet. If you install solar this year, you can still qualify for the credit. And so our point of view is that if you want to go solar, sooner is better than later. Acting now is going to save you more money than if you wait when there is more uncertainty. I would say one caveat is that since some people will not have the full tax liability and need to roll it over, even though it's likely to still exist for this year, there's a possibility that maybe you wouldn't be able to roll it over into future years if they take away the IRA or cancel it. So we don't know that part of it. But we do think you're going to be okay for this year. So to err on the side of caution, sooner is definitely better, if you're going to install solar panels or make any of these upgrades. And that, goes for everything, whether it's like batteries, solar panels, any of that. It does seem likely that they are more bullish on canceling the EV credit and the mandate. So it's a pretty safe bet that is going away. And I don't, if they're going to change anything or make it smaller, seems unlikely also. But yeah, for solar panels, we still feel pretty good about this year. And yeah, I'd say those are the main points for covering the Trump stuff. Another aspect to think about with this is that, right, they've said this is a pause and that they are going to sort of announce what they're doing next within 90 days. So towards the end of April, when we see what more actions they're going to attempt to take, we'll have a better idea so we can check back with you guys then. But most likely they're not going to be able to claw back the funding. They are already facing a lot of legal challenges in courts from multiple states, so they're going to have to litigate all of those lawsuits, and those things take time and are a headache. So yeah, that is most of the Trump stuff that we know for now. And I will pass it back to Jordan to explain how you do fill out the forms and apply for the credit.
Awesome. Hey, thank you, Alex. So how to claim the solar tax credit, we want to talk through this in 3 easy steps. Step 1 is determine eligibility. Step 2 is complete IRS Form 5695. And then step 3 is adding some of the information from Form 5695 to Schedule 3 and your Form 1040. So in step number 1, to claim the federal solar tax credit, you must own your solar energy system. Leases, unfortunately, do not qualify, and it has to be a system installed at a primary or secondary residence. Then you also have to have sufficient tax liability. Again, if you don't owe enough in federal taxes, the credit is going to carry over. So in step number 2, you're going to fill out Form 5695 or work with your accountant to make sure that we recognize the total cost of the solar system, any eligible energy storage devices like batteries that have a capacity over 3 kilowatt hours, that also qualifies on Form 5695, and other qualifying expenses we're going to want to add on, like labor, permits, wiring. And then once completed, that total credit amount is then transferred to Schedule 3 of the 1040. And then on Schedule 3, that's where all non-refundable credits are included. And so you would submit that with your tax returns. And it's very important that you hold on to receipts from vendors that you may so choose to use. And again, any unused portion is going to carry over into future years. That is above and beyond your tax liability. So 3 easy steps: determine eligibility, complete IRS Form 5695, and then add to Schedule 3 and Form 1040. Most of the time, your accountant is going to take care of all this for you. And then this is an example of Form 5695. It can seem somewhat intimidating, but there are some neat how-to videos of how to walk through this process in a simplistic manner. But again, your accountant is going to know this form in depth and can walk you through how to make sure to fill this out.
Awesome. Thanks, Jordan. All right. So that covers most of what we have had planned to talk about. And you guys have asked us a lot of questions already. So thank you for that engagement. We have been looking through and pulling out some of the most common ones. So feel free to keep dropping them in as we go. But I am going to kick it off by answering one of the first ones we got. Someone asked if a project was started in 2024 but will be completed in 2025, is it possible to get the refund in 2025? In most cases, I believe that if you have it's based on the date of installation and when it's placed in service. But if you have completed the majority of the installation, most accountants, I think, will recommend that you file for 2024. And also the safe harbor clause is mostly for commercial, not residential. So some of the rules are slightly different. But yes, there are changes to the tax code for safe harbor. Off the top of my head, I'm not exactly sure what they are, but we also have an updated article coming out about that sometime next week, so you can check back for that. I believe that, and then we have another question that says, does the tax credit apply to expansions of a current storage system? Sam, do you know the answer to that one?
Yeah, sure. Yeah, the tax credit should apply to all expansions for the batteries or the panels as long as it's new equipment.
Okay, great. Someone else has asked us, is the tax credit based on income tax liability or any tax liability? So the federal solar tax credit is based on it's income taxes, your federal taxable income. So that is all that it applies to.
Alex, I'm seeing another question here in terms of can you stack credits? And so the answer is yes. And so as an example, most of the time, when we see solar panel installations, most folks may consider, hey, now's a great time to purchase an electric vehicle, and you can stack credits, but you need to be careful in which in the manner in which you do stack those credits, because EV tax credits do not roll over into future years, unlike solar tax credits. So work with your accountant, financial professional, because if you stack one credit before the other, you're going to miss out on opportunities in the future of reducing income in future years. So that's very important to keep in mind.
Yes, that's good advice. And to add on to that, you can use multiple credits at once. So if you use the ITC to get solar panels, but then you also install a heat pump the same year, you can also still apply for the heat pump. And I believe the cap is something like $1,200 for that. So you can use multiple clean energy credits in 1 year. And you can also still apply for rebates and state incentives on top of that. And you can also use the solar tax credit more than once. So kind of what we were saying with expansion, if you installed solar panels last year, you can claim it for last year. If you install more on your property this year, you can claim that 30% credit again this year. Okay. And yeah, just to reiterate, if you are getting a substantial refund, if the 30% that it equals that whole amount, you can just use it in that 1 year. But if not, it rolls over. It really just depends. You just can't have more than the liability. Okay, does the rebate still apply to heat? So rebates are separate from a tax credit. A rebate is really when you kind of get cash back from the state or a manufacturer or something like that. There are a lot of great rebates for heat installation, for heat pumps, as well as solar panels, but that's in addition to the tax credit. And we have a question about upgrading our roof is not covered if you need to upgrade your electric panel. Sam, do you know that one?
So the electric panel would not be covered under the solar tax credit. There is an incentive for electrical panels, though. I think it's capped at $250, I want to say.
Okay, so a little bit. Um, okay. And someone else I had seen asked, why doesn't replacing your roof count? I'm not totally sure, but I think they generally exclude it because for most people, that's something that you would have to do anyway. So it's not really relevant in the sense that you have solar panels, because you'd still have to be replacing your roof 5 years down the line anyway, or something like that. But yeah, so you cannot include your roofing expenses in that.
Alex, I'm seeing a question that pertains to how do I maximize the solar tax credit in a particular year if you don't want those monies to roll over. And there's a lot of cool techniques and tricks to, in essence, utilize all those credits in a particular year. I would get with your accountant or your financial professional, but some things that come to mind is if you have a retirement account, you can start moving that money from the traditional portion of the 401k, let's say, for example, into the Roth. Let's create some tax liability for you. In addition, there are cool tricks in terms of if you have an after-tax account, you can tax gain harvest. So it allows a step up in basis. So there's just a lot that folks can do to intentionally increase tax liability in a particular year to really benefit from these credits and not have to wait another 12 months for the rest of the amount to take effect. So there's some really cool tricks at play. But it's beneficial to get with your accountant, your financial professional, and talk through your personal circumstances in detail.
Yeah, and I would just reiterate that I think especially if you're going to install panels this year, it's an extra good idea this year to talk with a financial advisor or someone like that if you have access to them, because it probably is just smart to be cautious if you want to think about maximizing it rather than waiting for it to roll over, since we don't know how that might change in the future. All right, we have a question about condo owners making use of the tax credit. So there's no difference whether it's a condo or your own personal home, but what you do want to make sure is checking with your HOA if you have an HOA or any type of co-op or anything, because some HOAs will have rules against installing solar panels, or they'll have regulations like they can only be installed on the back of your house or not the front. And aesthetic guidelines like that. So if you have an HOA, it's always good to check with them first. All right. So yeah, are there still savings going on with solar, even if federal incentives are rolled back? It is just the federal incentive that could be rolled back. So states might still have their own incentives. It will vary more by state. Maybe they would be reduced. Some states might increase them to cancel out, if it gets taken away. And same thing, rebates from manufacturers that will also be at their own discretion. The credit for EVs is going to be taken away. So that, as far as we know, is not going to exist anymore, someone asked. And yeah, just to reiterate, the primary residence and for people that own two homes, if you are a landlord, like if you're renting out your second house, it does not qualify for the federal solar tax credit if you put solar panels on it. However, if it is your personal vacation house and you live there for half of the year or a certain amount of time during the year, that could qualify as a residence, and that would be something to ask your accountant about. But if you have a property that you rent out, that will not qualify. Okay, what else? Someone asked about tariffs. So tariffs, yes, they will affect the price of solar most likely, but that is a separate issue than taxes, and we won't completely see that'll take a little time to sort of materialize. We'll see if there's an impact if the prices go up, if manufacturing becomes more expensive, but we're not going to know how that's going to play out just yet. And I believe someone asked about using TurboTax if you are filing your taxes yourself with tax software. I believe most of them should prompt you to fill out the form as Jordan was talking about. But you would also have to double check. But I believe most of those systems, yeah, it's part of it, just like any other part of the tax code that it will ask you to cover.
That's right, Alex. TurboTax will do a good job at helping folks out better understand what that tax credit, if any, looks like.
Yeah. Okay, and someone said, I'm a W-2 employee, income taxes withheld by my employer. I usually get a minimal tax refund after filing my taxes. Do I need to ask my employer to withhold less? So I think, yeah, something like that is definitely an option. But like Jordan was saying before, that is a great question to talk to a financial planner about, or a CPA or your accountant, because there are some, there can be other implications of changing your tax filing. So you just want to make sure that you're doing it in the correct official way. Let's see, what else? You guys have asked so many good questions. Someone asked about regarding the uncertainty of tax credit, whether leasing a solar system or signing a power purchase agreement could make more sense for a homeowner. And that is a very smart question. That is definitely something I think that is worth considering more this year and in the future than ever before. We have generally sort of recommended to people that it's better to own because you can get the tax credit. They don't get taken off your roof in 20 years to go back to the leasing company. But if you are someone that is really worried about this, leasing may give you more peace of mind. So that's definitely not always a bad idea. And especially now that we know, interest rates, if there had been a Democratic administration, the Fed was expected to continue cutting interest rates. It seems like they are not going to really cut interest rates for the rest of the year. So, of course, if you were going to finance your solar panels with a loan, your monthly loan payments might be a little higher, which is also a reason to consider leasing or a PPA in this particular situation. All right, I'm reading through some of these. So someone asked about tree trimming. I do think that most people consider tree trimming part of, a lot of accountants will say you can write that off as part of the solar tax credit. But sometimes it can depend who you're working with, right? Like it depends. Some accountants are happy to write off everything. Some people are a little more conservative, but I think most people do consider it directly related to the performance of the panels. So you should probably be able to include that, even though you cannot include any roof replacement. Someone asked, does the number of solar panels affect the amount of the credit? More panels, more credit. It's not about the number of panels. It's just about how much it costs. So there's no income limit to claim the credit. There's also no maximum dollar amount to claim it for your system. So whether you install $20,000 worth of solar panels or $100,000 worth of solar panels, if you qualify, you can still take 30% off the whole installation process, no matter what the price tag is. Someone said, how does the IRS know when you installed your solar panels? Because there are dates on the receipts that they will ask you to submit, just like any other paperwork and documentation. They can always request that from you, or if you were audited, that's the type of stuff that you would need to show them to prove your installation date. Which also is a good reminder to keep all your receipts, save emails, any type of documentation you get from your solar installer, the tree company, from your lender or the finance institution you work with. If you do get a loan, just keep everything because it's always good to have that stuff on hand. We actually have a great resource for all of the different state incentives. Somebody asked, how can we find out about our state incentives? We update those regularly, so all of the information on EnergySage about state incentives should be up to date. Sam, we have a solar shingles question if you want to take that one.
Oh, sure, yeah. Yeah, so solar shingles, definitely get a lot of questions about those. In terms of the tax credit, as I think most people understand it, because it's a roofing material, but also solar panels, it would allow you to get the tax credit on essentially doing a re-roof with solar shingles. So that could be an advantage of the solar shingle there. Generally, though, they are a lot more expensive than solar panels, and they tend to be less efficient. So right now, we're still seeing panels as kind of the best option for most people.
Someone asked about self-installed solar projects, which is actually an interesting question. I don't know if I've seen that one before. I think that's pretty uncommon. But as far as I know, if you're installing solar, it shouldn't necessarily matter who installed it. If you are having clean energy be a power source for your home, it should qualify. Would you know this one if you're Jordan, if you're using the standard deduction for your taxes? I don't think that should impact it.
No, that has no bearing. This offsets the tax liability, which is even better. So yeah, whether you take a standard deduction or itemize, whatever your tax liability is, let's say it's $5,000 and you have $6,000 of a tax credit, the $1,000 is going to roll over into previous years. It has no bearing on a standard deduction or itemized.
Yes. All right. I think we've gone through a pretty good amount of these questions. We'll just read over a few more here. So some people have asked about things like net metering and SRECs, and those are all in the same vein of, there are incentives and ways that you can save money and reduce your bills, get bill credits, get your utility to pay you for the energy you send back to the grid, but they are not directly related to the tax credit. They are separate things, and I think depending on your state or your utility or the specific rules, it depends where you live, really, whether or not that affects how they would apply the credit. But they generally, they're separate things. Like net metering are state policies about whether or not you would get money back if you're signed up through your utility, which is separate than taxes. Someone asked if we have recommendations for choosing solar installers. We definitely do. That is what the EnergySage Marketplace is here for. So you can talk to an energy advisor like Sam. You can talk to someone on the phone, and they can give you, personalized recommendations for the region that you're in. But you also, if you submit your information and fill out a quote for us, you'll get back a bunch of different bids. So you can also compare them yourself, and you can read the reviews from people on our website. So I would recommend doing both of those things if you're looking for an installer. Someone asked about that they signed a PPA. You do not qualify for the credit if you signed a PPA or a lease, because a PPA and a lease are considered third-party ownership. And so the owner of the solar panels is the company that you're leasing them from. So since you're not the owner, you can't claim the credit. So the company that you're leasing the solar panels for actually applies for that 30% credit. And so they benefit from that instead of you, which is why we tend to recommend ownership over leasing. Someone asked if we install solar to power a swimming pool pump, would that qualify? I think that it as long as you're powering your house with clean energy, it doesn't really matter whether you're using your microwave or a hair dryer or heating your pool. That counts as using a source of clean energy. So yes. All right, what else? People asked about typical return on investment for solar. So normally the average solar panel system costs about $20,000 to $30,000, which means that the average credit is about $10,000. If you pay in cash, most people who go through EnergySage tend to pay that off in about 5 to 7 years. And so that's a pretty good return on investment, because you can keep your solar panels for 30 years, which means that after 5 to 7 years, you're not really paying anything for your electricity. If you take out a loan, most people tend to pay off their loans much earlier too, in less than 10 years. So it's the same situation, whether you take out a loan or you pay in cash. And most solar panels, they used to last 20 years. It's creeped up to about 25 to 30 now. Every year as the technology improves, the life of the panels is extended. And yeah, you guys have asked a lot of great questions today. I don't know if Sam or Jordan, are there any that you would want to pull out that you see around here that you would want to answer also?
Good chat right now.
Okay, I
Yeah.
can have one I can answer while if you guys want to look through. Someone asked, can you depreciate the cost of the solar system if it's income generating? So that is a great question. There are some so bonus depreciation and another type of tax depreciation, modified accelerated cost recovery. Those are generally commercial and business tax advantages. However, like this person asked, if you are connected to like net metering or net billing in your state and you are sending energy back to your utility, Under the tax code, that usually is considered that you are contributing to a commercial income producing activity because your utility is a commercial business. So yes, that is another additional tax benefit. If you are working with an experienced CPA who can help you do that, you can apply makers and bonus depreciation in addition to the federal solar tax credit. So that often can actually be a way to get the 30% tax credit and then another 20-something% off over 5 years. So if you are if you're running SRECs or you're connected to net metering, that's definitely something to look into because it can reduce your taxes by many more thousands of dollars. Right, yeah.
Alex, I'm seeing quite a few questions that have to do with withholdings. Again, I would speak with your accountant or financial professional. So the tax credit is going to reduce your tax liability, but nonetheless, there are some ancillary questions that you need to think through before you make any adjustments to how much you withhold. Because there could be such a thing as an under withholding penalty, and you don't want to incur that. So in addition to seeking guidance with what panel system may make sense. You also want to seek guidance in terms of how do I strategically plan to utilize these credits. That's also important as well. And it's all very specific to your personal circumstance.
Definitely. Sam, any you see there you want to answer?
Yeah, I just had one. It said if we install panels on both the house and the unattached garage, would the connection between them be covered on the credit? They might need to dig cables, do trenching. And so, yeah, that would all be covered under the tax credit. It's all part of one system. It's all going back into your home. Doesn't necessarily have to be, the panels located physically on your home as long as it's going to your electrical panel and your meter. Same thing, I think somebody mentioned a ground-mounted system. Same idea. That would all be covered with the tax credit.
Awesome. Okay, great. And I hear someone here said, what is the average maintenance cost of a system per year over its life? That is one of the great things about solar panels. There are almost no maintenance costs over the years. You really should not have to spend that much money on that. For places where it's snowy, usually the snow will kind of fall off at the angle. You can do certain things like they make solar guards, so you can make sure that birds or squirrels and kind of animals like that don't damage them. But for the most part, solar panels are very self-sufficient and it's kind of a set it and forget it situation. So you don't have to account for extra money for maintenance. Yeah, and solar panels usually last about 30 years. So after 30 years, you likely would probably have to get new panels. And someone asked about upgrading panels from old panels, if that would count for the tax credit. If you're getting completely new panels in a different tax year, then yes, you could claim the credit again. Okay. All right, we have about 15 minutes left. And just a general note, I've seen a good amount of questions about tax credits for nonprofits and churches and businesses. So they all have slightly different rules, and we have a lot of resources on those also. But yes, you can still claim the credits. It works a bit differently for places like nonprofits and churches. That's something called direct pay, where the government will actually send you a check for the amount that you spend on solar panels. So it works slightly different than the residential credit, which you do not get mailed a check. It just directly reduces what you owe in taxes. So it's slightly different when you're talking about commercial or nonprofit versus residential. So those are separate things that you should look up. But yeah, And I think too, we're going to find out over time this year what they plan to do with those credits and if the administration is going to change them or not. But a positive thing is we know that solar panel manufacturing has created a lot of jobs in a lot of red states and Republican regions, and a lot of both Republicans and Democrats in Congress really do support solar. It's good for job creation. There's been a lot of financial benefits to people in all areas of the country. So in that sense, we are hopeful that the administration is going to be supportive of that.
Yeah, and I think it's worth noting, right, too, Alex, the last time Trump administration was in office, the tax credit still remained as well, too.
Yeah. Yeah, so I do. I think there's a good amount of reason to be positive and to think that it will be around in some form. They might modify it, but optimistically speaking, it seems like it's a possibility. They're not going to completely write it off. Yeah, and I'd say, just to reiterate what we talked about before, you should be able to claim it for 2025. So sooner is better than later. If you're thinking about it, you may as well do it now. You don't need to wait till November or December and get yourself in the situation where it might take longer to install and you're getting into January 2026. If you think you want to do it, our advice is to do it now.
Yeah, and I would just reiterate that too. I know we've seen something kind of similar in California when a lot of the net metering legislation changed 2 years ago now, and it was quite a rush once that decision came down that the incentives were ending of people trying to get in line and get their system installed, and it could be quite a bottleneck, so it's good to get ahead of that as well too.
Yeah, definitely. Great. I think we've answered a majority of the questions. So I guess I would just say, Jordan, if there's anything else you want to add, and we can probably give you guys a little bit of time back.
Thank you, Alex. Generally speaking, a lot of the questions, they were circumstantial to personal circumstances. So speak with your accountant, your financial professional, make sure that you're getting advice that's relevant to you, where we're giving you high-level overviews, but it's always great to check in with someone who knows those personal circumstances.
Definitely. And if you guys have any more follow-up questions that you want to personally ask any of the three of us, you can absolutely do that. You can scan the QR codes that are underneath all of our names on this slide, and our contact info will come up. So we are available to you. All right. These were great questions. I really appreciate all of you guys joining. And we just want to make sure you know that you can visit our Clean Energy Tax Guide, which it covers everything that we talked about here and more, and probably answers, a lot of the questions that you guys have had. And there's a QR code for that on the screen as well, which will bring you right to that webpage. So thank you guys so much for joining, and thank you to Jordan and Sam. This was great. It's always great to hear from you guys, and we hope to see you again soon. Bye-bye. Thanks.